Welcome to another update on the markets. I'm Nick Stratus and I'll be taking you through what's happened in the last couple of months. Now, the Australian dollar can make a difference with returns, and international equity type of investments performed well in the first part when our dollar went down, but as it picked up, it certainly has brought returns a bit closer to Australian markets. So equity markets, it's been a difficult year with most of them recording negative returns. International markets have been a little bit better, but then again it depended on which market you were involved with. If we look at property markets, the news has certainly been a lot greater, particularly if you were investing in Sydney or Melbourne. The outlook looks a little bit more subdued, but returns seem to be okay in the medium term, short to medium term, for property, direct property, particularly in Melbourne and Sydney. Commercial property has been an outstanding performer this year, and it just shows you that with markets turning around, they can go from office or industrial to commercial. But property seems to be in a reasonable, probably a little bit more subdued than this year's performance, which has been quite outstanding. I suppose one of the reasons that's been well is, apart from the demand for commercial property, interest rates this year have gone down as a whole, and that always is a positive thing for property markets and probably share markets, but they haven't worked as well. With interest rates likely to be on hold in Australia anyway, it looks like maybe that's brought performance or growth to a more subdued, more normal type of outlook. So property seems to be okay. Again, Sydney and Melbourne have done reasonably well, and it's likely to continue in the short term unless we get a big change in interest rates. Now, talking of interest rates, that's affected fixed interest investments, and if you were a cash investor or term deposits, you would have seen rates come down this year quite dramatically, and it looks like those rates are going to stay low. So for those looking for safe investments, it's getting difficult. Fixed interest investments themselves have performed funnily in that they had some good returns and then some poor returns, but giving you marginally better returns depending on which month on the market's outlook. We think that the American Reserve Bank is going to increase interest rates. It almost seems like a certain before Christmas. So it's likely that will have some impact on other markets going forward. Certainly it will affect the Australian dollar because generally speaking, when there's better rates or higher interest rates overseas, people tend to move their money, which affects the domestic currency. Otherwise, interest rates will be more or less subdued, but if you were to invest, probably Australian fixed interest would be the better outcome. So in summary, it's been a very interesting year so far. Christmas has half given us wrapped presents, including property and to some degree shares, but overall shares have been a poor performer this year, likely to continue. Property is going to be relatively stable, and fixed interest is performing probably as you expect, but not that so well. So an interesting 2016, and hopefully we're much better and Father Christmas rewards us a lot better. Thank you, Nick Stratus.